All right, let's get into it. We are about to pull back the curtain on one of the market's biggest head fakes, and I'm going to show you how to turn what feels like a trap into your single greatest trading advantage. Hey everyone, welcome to AI Explains ICT. In this video, we are diving deep into a game-changing concept from the Inner Circle trader, pulling directly from his core content, Month 4, Episode 5. We're breaking it all down, so I'd seriously recommend grabbing a pen and paper. You're going to want to remember this stuff. So let me ask you something. Does this sound familiar? You're in a trade, everything's looking good, and then bam! Price just spikes just enough to take out your stop loss, and then it immediately reverses and heads in the direction you predicted all along. It's beyond frustrating, right? It almost feels personal. Well, here's the thing. What if I told you that move wasn't just bad luck, that it wasn't noise, that it was actually a very deliberate, calculated move? A kind of market head fake that is screaming at you that a huge opportunity is about to happen. You know, most traders, they see a pattern like this and they just think support and resistance. They see a breakout or maybe a failed breakout. But according to ICT, this is way, way deeper than that. It's actually a clue that the big institutional players are setting a trap. They're engineering a run on liquidity. And this is what we call a stop hunt. It's a deliberate shove in price, pushing it to a key level where they know tons of stop-loss orders are sitting. But the most important part is what happens next. That reversal, that's not an accident. That was the real plan all along. So how do we read this play and, more importantly, use it to our advantage? Well, it all starts with understanding the anatomy of a pattern that ICT calls the bearish breaker. Okay, so let's break this down piece by piece. First, the market pushes up and takes out an old, obvious high. Now, to most people, this looks like a super strong breakout, doesn't it? It pulls in all the buyers to go long, and it stops out anyone who is trying to short. But what's really happening is that this raid on buy stops is the first step in trapping those exact same buyers. Now, this is the part you absolutely cannot miss. This is the confirmation. Instead of blasting off higher, the market slams on the brakes and aggressively reprices lower. I'm not talking about a gentle pullback here. I mean a fast, violent move down that breaks the most recent market structure. That right there, that's your signal that the trap has just been sprung. And this is where we zoom in. You see that last little swing low that was made right before the raid on the high? Well, once that level gets smashed by that aggressive move down, that entire price swing becomes our bearish breaker. It literally flips from being a potential support to a high probability resistance zone where we can look for a sell. Now, what's so cool about this is it's not just for shorting. The exact same logic works perfectly in reverse, and that gives us an incredibly powerful bullish setup. So let's look at the anatomy of a bullish breaker. I mean, just look at them side by side. It's a perfect mirror image. We're not learning a whole new concept here, we're just flipping the script. The same principles of trapping traders and then reversing hard, it's all still at play. So for the bullish setup, the market first dives down below a clear old low. This move triggers all those sell stops sitting there, and it baits breakout sellers into jumping in short, thinking the floor is falling out. These sellers are now walking right into the trap. And there's a really specific institutional reason for this. ICT puts it perfectly. The sellers that sold this low will look to mitigate the loss when price returns. What this means is the big money that sold heavily to push price down and run those stops, they're now on the wrong side of the trade as it reverses. They're going to be looking for a chance to get out of those losing shorts at a better price. So right after that raid on sell stops, the market reverses and reprices aggressively to the upside, breaking the last swing high. And just like before, that broken swing high, that now becomes our bullish breaker. It's the key support zone where we can expect that institutional mitigation to happen, making it a powerful spot to look for a buy entry. All right, enough diagrams. Theory is one thing, but seeing this play out on a real price chart, that's where it all clicks. So let's jump into a practical example and watch this build in real time. Okay, let's apply this. First things first, look at this obvious old low right here. See how the market trades down and just punches right through it? That's our raid on sell stops. ICT calls this a turtle soup, a false break below a low. The trap is officially being set. Okay, step 2. Now we need our reference point. We look for the last little swing high that was made before the price took that nosedive. Once price rallies back up and breaks through that high, we can mark off this whole area. This zone right here, this is now our bullish breaker. It's our institutional landmark for a potential buy down the road.
And there it is, step 3. Would you look at that? Price comes all the way back down, right into our bullish breaker zone. This is that mitigation happening. And the result? An absolutely explosive move higher. That's the real intended move of the market finally being revealed.
So you see, this gives you a repeatable process. There's a story playing out behind the price action. So let's boil all this down into a really clear, simple trading blueprint that you can start looking for today. Here it is, your 4-step checklist. First, you've got to spot that initial raid on liquidity, the stop run. Second, you have to wait for the confirmation, which is that aggressive market structure shift back the other way. Third, you mark the level that was broken, the swing high for a buy or the swing low for a sell. That's your breaker zone. And finally, step 4, you patiently wait for price to come back to that zone to look for your entry. And once you get this framework, you're not just looking at random lines on a chart anymore. You actually have a narrative. You understand the why behind the price moves. That stop hunt isn't a source of frustration anymore. It becomes the signal that your big opportunity is just getting started. Hey, if this video helped you see the markets in a new light, please do me a favor and hit that like button and subscribe for more deep dives into these powerful concepts. And seriously, if you have any questions at all, drop them in the comments below. A human will get back to you. So the next time you see price take out a high or a low and then violently reverse, you won't be asking, why did I get stopped out? You'll be asking, is the trap now set? Safe trading.